Wicked Wednesday, Warriors. Say that 10 times fast. Wicked Wednesday, Warriors. Give it a shot. How are you, Alexander? We have many of the Dream Team members are here today. We're here to help each other navigate the markets and you. Okay, so full house. Stel, Grega's here. Everyone's here, came in. Ryan, Blake. We're laying it on the court for you. How you doing, AJ and Kurt? Bitcoin breakout. Haven't looked yet. Bran, yes, I'm holding up the world, but I have a rotator cuff injury. I don't know. Anyway, my shoulder hurts. Yeah. Oh, let's see, Blake. It already is a great show, Blake. Paul, how are you? K-Man, Stel is here with silver on the verge of making new highs. So what a surprise. And Patrick's here. Hugo, Ryan, Mr. Levels is here. Get your leveler out. Hugo, all hail the Dream Team. Hi, Chi Ming from Singapore. How are you? Do you go the exchange here and cash and carry gold out of the gold exchange here? Okay. Ryan, who simplifies the most difficult things. Yes, he does. All right, let's get to the markets. All right. So first of all, let me start off with Ryan. What took cable down, buddy?
Morning, mate.
Yeah, how are you?
Yeah, much softer CPI.
That was it. Okay. There. All right.
Yeah, it sort of validated Bailey's comments last week that the BOE could get more aggressive and activist on rate cuts, which has now been proven true. The weird thing is, though, rate expectations haven't shifted that much. I thought on those numbers we'd be pricing a 50 cut at the next meeting, but we're not. So we're barely pricing. Well, we're not pricing 2 cuts for the rest of the year. So that one's a bit strange, but the market's done its thing anyway.
Yeah, you know what it did? It cleaned out the bottom pickers for the last 2 weeks and no follow through so far. I wouldn't short it here, guys. We've already had a big break. I still think even though we've had one more push lower, that there's a rally coming to above 132.5. I'm not going to trade it in case it doesn't do that. It's a continuation move, but I'm looking to get short up here. And that's more of a, I think we're going to put in some type of right shoulder here on the daily. Just like the yen, that was a forecast when it was at major support, cable as well. So I still think that we're going to head up here. I don't know what the catalyst would be. Anyone know?
Might get that. You might get that if the budget comes out okay and the market's happy with it. Okay. Depending on where we are in 2 weeks, but if we're around 130s, you might get your shoulder on the back of a good, well-received budget.
Yeah, that would be a big trade. And yen, it came off the 3 drive on the 4 hour. Not convincingly, but this last bounce hasn't done much either. I mean, it's pretty classic formation. So, didn't get to 150 and change. You missed it by 3 pips. Does it look like we're rolling over here?
Tough.
What would tell you? Okay, levels. If it breaks, what level?
148 first instance. Okay. Bigger turnaround if 147 goes, 147.20. But as usual, you've got to keep your eye on those yields. They're still dribbling lower, and I've been saying it. That's likely to put the brakes on. Further rises in dollar yen. Purely on the dollar side of things, anyway.
So here's TLT. Testing this breakout line, and Ryan said you always have to play these levels. And you notice how, it did trade beneath it, but did not close underneath it. That's a pretty good day that we have going here, this could be an important turning point. We could come back down and, maybe this is it. But, when I look at the weekly, I know the week's not over. And I think part of it was, some risk off yesterday. Also look at what it held, 200 day. So that's where your stop should be if you're a bond bull. Maybe you wait for a break. I actually know someone that was looking for a low on the 18th, but that looks all right. And 10-year yields, this is going to be big, on a pullback here. So I've talked enough. Everyone's here. Came in. What's top of mind for you
Hi.
today? Hi, buddy.
What's top of my mind? Well, we are going into the ECB tomorrow, and interestingly, Mrs. Lagarde, they must be like doing their meetings in Slovenia this time, and she will be giving a speech at the dinner at the Central Bank of Slovenia tonight.
You know why she's going to Slovenia, don't you?
Sorry?
You know why she's going there, right? To Slovenia?
Why is that? Because of oh, but maybe you don't know him. You know Pogacar, the cyclist who wins everything
No,
these days?
no, but I think she saw a picture of Grega Horvat.
Ah, that is possible. But
Uh,
Grega Slovenia,
and she's a cougar.
yeah, yeah.
Huh? You know
Oh,
what a
that's
cougar is?
possible. That's possible.
All right.
No, so 99.9% he wouldn't say anything because it's just the day before the meeting. She should not comment on anything, but it could be a bit of a surprise if she would open her mouth on some direction like dovish or less dovish also for the euro. So we have to keep an eye on that today. The other thing I'm
Look what
close
it
to
came
becoming
off of, K-Man.
sorry.
200 day. I think
Yeah, exactly,
you were talking these levels, and
exactly.
Ryan. Sometimes I confuse the two of you.
Yeah, exactly. 108 three quarters down to 108.35 for me. That's
Yeah.
a very big level on the euro, and yeah, 108 three quarters for a starter. It tagged it today, early this morning in Europe, and we held there. So, and the other ones, keeping a very close eye on other metals, of course, they are just flying through.
Oh, stop it already.
Feels a bit off. Metals are doing well, and yeah, we never had the real correction on anything of the Middle East. So
Yeah,
this looks like
never did.
gold wants to trade 27 or 2800. I've got like relatively decent targets 28 on gold, and just feels to me like the market won't rest before we get up there.
It
Silver
won't
is
rest
a
until there's a retaliation. You think it's
sorry.
going to be until Israel retaliates?
Yeah, and then once that's done, we may need to revisit. It's gonna be all about timing, of course, when that happens. Silver is a very docile follower as well, so Stelios is long, well done. Yeah, it's
61.8 back, just letting you know.
looking
61.8
good,
back. Okay. I think
looking
it's
very
a
good.
short here. You're wrong over the highs. Anyway, I'll put my money where my mouth is and risk 50 cents here. So anyway, so we'll see. I mean, I could be wrong. The key is going to be what this does today in the metals, okay? This is going to be the key. So if this is consolidation off this first bounce in gold silver ratio,
Yeah.
and we're getting ready to put in a reversal day, and we're heading towards 90. You could be right. I mean,
But
it's
do we
not a
trade it?
directional.
Do we trade it before the retaliation if something happens, or do we trade it after? I would be tempted to say
After.
wait until we know what's going on with gold on the Middle East situation. But yeah, I
Yeah.
mean,
Well, I'm just saying if this is going up, um, then gold's your preferred long. Okay, I mean they could both go up together, but your outperformer is going to be gold. And so the gold silver ratio isn't a directional call. But if the dollar rally isn't through, and God, we haven't even corrected we're yet. Um, I guess
Dale,
if
can you,
yeah,
sorry to interrupt, can you turn up your volume maybe a little bit because you're
come
quite low on volume?
just come back in
Or
front of me.
I'm
come.
going to have to get a new
There
headset. I
we
think.
there we go. There we go.
Yeah, that little the spongy ball's too far away from my mouth. But
Okay.
all right. So Stel, you're here.
Yeah.
Go ahead.
Uh,
Next upside target for silver. You want the charts,
Yeah, I'll take the charts. Hold on. I'll take the charts.
and then we'll
Continue.
go to Grega because he's a busy man.
Okay, I'll talk about yields in a second. So
Yeah,
gold, sorry, silver. For those who are in the chat room, they know I was looking at the retest of this trend
yeah,
line, and I got long here at
nice.
30.67. I put on a pip as well there, which is doing nicely. I've moved my stops up to 31.30, and
Okay.
target really is 32.70. You know, these highs up here. Um, let's see what happens. I agree with you. If the ratio, gold silver ratio goes up, obviously gold outperforms. But I think silver still has a lot of catching up to do, and really, it's these highs up here that need to get taken out. And if you look at the weekly or a monthly chart, you will see just how much silver has underperformed. That's why it's my preferred long at the moment. But yeah, so metal's doing well. With gold hitting new all-time highs, or pretty much nothing bearish here whatsoever. And for me,
Yes, there is.
what
There's one
is
thing. Go back there. I
what
know
is?
it's not a trigger. The RSI.
Yeah, okay.
That's
True.
I mean, you said there's nothing bearish, and it's
True.
not enough to reverse. But is a warning. That we're not making that momentum's not confirming this high.
Yeah,
Doesn't mean it
true.
won't keep
True.
going, but
True, but look at the last 6 months. The RSI has been relatively, within regular limits.
yeah,
Let's say it's not too much, not too high, not too low, and still gold has been going, slowly sideways and then steadily upwards. But yeah, you're right. We need to see what happens to the RSI once we push higher from here.
yeah,
For me, the main driver still is
yeah,
yields.
yeah.
And I was talking about maybe trying to hit this 417, which was a nice little conference. We didn't get there. And for the past few weeks, a majority of people have been saying, yeah, inflation is being higher. It's going to be higher for longer. Yields will have to go up in the short term. So for the rest of this year, maybe Q1 next year, I disagree. I think yields are going lower, and I think inflation is going to be undershooting. And I think Ryan said that as well on one of his posts. But eventually, I think inflation is going to come back with a vengeance. But for now, we see this in the UK. We're seeing it in Germany, or was it Germany or France? France actually printed well below 2%. I think it was 1.2 or something like that. So I think we're going to keep seeing that. And frankly, the US is the only one that's really still relatively sticky and is coming down at a much slower pace. But I think overall, worldwide, inflation is encouraging for central banks, that is, who have the built-in need to be easing at all costs, because this brings wealth effect, and equities go up, homes go up, and everybody's happy. So for me, if you ask me, same with stocks. If you ask me, what do I do with these? I buy them here. I'm not saying chase this up here, but if you put a gun to my head, I would definitely not sell these markets, because it still feels like the path of least resistance to the upside. And the same for Bitcoin
Yeah, breaking
and
out,
cryptos in
trying to break
general.
out.
Yeah,
Yeah.
breaking out of the channel. And people know me, I'm not a fan of cryptos. Maybe it's because I don't understand them that much. But having said that, they're a risk proxy. And as long as we're not getting a big crash or a black swan event, uh, these keep going higher. So, that's my view on these. It hasn't changed at all for the past weeks. I keep saying the same things, but you know me, I like to be convinced that something is different before I change my mind, and I don't see anything different at the time.
You're
So,
pretty good, kid. You ever think about going into the business?
yeah, in my previous life, I was. Um, Yeah, so that's my view. The dollar is still trying to kind of bounce, and it obviously did bounce well from this trend line. This was a very, very nice technical bounce, and it's taken us up here. But now we're getting close to the 200 DMA, which is always a pretty big level. And you can see that this 103 and change has been very important over the past year or two. So, uh, you know depending on data, this could be it for this surge. Maybe we get a little bit higher, but I'm going to reiterate, I think this resolves to the downside. Same with yields and same with the dollar. Sorry, not with the UK index. Sorry. Same with the dollar. I still think that happens. And after that, obviously much more medium term, I think the dollar is going to have a nice old squeeze. But for now, I think this all resolves to the downside.
Yeah, I'm thinking back down towards 101.5, and then another wave at least equal. That'll take it to 104 if it's a fib extension, and I think it's a great segue for bringing Grega in.
Yep.
Grega, do you? Stel, great to hear you, man.
Thank you. Good to be here.
Yeah, thanks for sharing. Don't fade Stelios at your own peril. You know, I've tried it a few times, and silver usually wins. The bastard.
I am patient. That's a key. I'm patient with bloody.
All
silver.
right, he's a patient bastard. Anyway, let's bring in the Wizard of Waves. You there,
Hey, Dan.
Grega? How
Hey,
are you,
I'm
buddy?
here.
All right, you want to show your charts? Last
Yeah.
few times you just talked. So
Yeah, I have them ready. Yep.
okay, go ahead. What's top of mind here, buddy?
Yeah, so actually I will start with metals. I had a very similar setup like Stelios. So we had some very nice pullbacks on both gold and silver recently. And what I see on silver right now is that we are here in a fifth wave. We still have some room left here for another high, but keep in mind that this can be the final part of this missing fifth wave of a fifth. So I think that we could be moving into some resistance up there around $33. Also, if you look at the 4-hour time frame, this can actually be ongoing ending diagonal or lead, or maybe even just as a wedge pattern that gives you the idea that there can be limited upside once we reach a new high. So once we reach new highs on both gold and silver, gold obviously is around there, but I'm thinking
you
that
put out a very nice report before this last wave that gold has more upside. How can, you know, our audience and people that maybe watch our videos, they have to be a member to get that report, or you put that out free? It was not behind the paywall. It was a great report. Do you remember? You wrote a report last week about gold.
Yeah, no, I mean, I wrote this blog posts, like free blog posts occasionally for our members and also obviously for our followers on Twitter and social media.
Oh, okay.
Yeah.
Yeah. So this was so it's manifesting what you wrote about a week ago.
Yeah, and the reason why I shared that report because I saw quite a very nice, good trading setup based on everything what was going on. And what really caught my eye is that gold and metals in general are doing well despite higher dollar. And what I see right now is that dollar is actually moving into some resistance here around 103.50 to 104, which is also the 61.8%. So if possibly we see some pullback here on the dollar, I just think that the gold possibly could extend very quickly to 2,700 or so. But still, we are slowly coming into this higher degree fifth wave on these late stages of this uptrend. So I would be very, very careful up there and definitely would not be chasing markets much once we reach these levels.
Okay. Yeah, and I like that count in the dollar. Where are you at on yields? Has TLT bottomed? 10 years peaked?
Yeah, I mean, TLT, I didn't notice if you were looking at, because you mentioned it earlier, I think that we have some very nice channel support here, but if we start breaking lower, then I'm afraid that US yields have more to go and the dollar will stay either sideways or even bullish for the next, let's say for the next month or two. So I just think that this recovery, the whole recovery, even if that would be corrective, is still incomplete. But I am aware of this wave B setback. Now we have the ECB tomorrow. Obviously, cuts are expected and maybe already priced in the markets, and there can be actually maybe some support not that far away for here on the euro dollar as well.
Exactly. Yeah. Okay.
But it's still seller rallies anyhow. You just have to be patient here and get your levels.
Why would C be shorter than A if this count uh, plays out? Why would the C wave be shorter than the A wave?
Yeah, I mean, I'm not projecting wave C at this point. Whenever I want to project wave C levels,
yeah,
I need wave B completed first. Then we
Okay.
can use the FIPS, the proper FIPS and tools to
yeah.
project.
Because I
wave
think
C.
it would take it back down to around 106, some kind of equality.
Yeah, I'm looking at definitely this level as a strong support at 107.80, but
Okay.
after we get this bounce for a wave B.
Okay. And S&Ps, is there enough for, you know, I'm looking for maybe a 5% pullback?
Yeah, I mean, at least if we try to focus on these short-term swings here from September lows, we can count 5 waves up. So I think that we are in very late stages, or at least of this lag. So I'm thinking that sooner or later we could step into this new wave 4 correction. Even if you look at German DAX, that's a pretty dangerous pattern up there, right?
Yeah.
I mean, even
Ending
better.
diagonal?
Yeah, exactly. Even better and more important is here on a daily time frame. So it looks like that we are running some out of steam here, and that we could be moving into very strong resistance as we approach 20,000 here on DAX and 6,000 on the S&P 500.
Okay. Anything else you want to share?
Yeah, if these markets move to the downside, watch yen crosses. I really like Aussie yen. Aussie is very weak, and China has recently pulled back. And I think that with more weakness on China, and if U.S. stock market will follow, and the European ones, then I think that yen crosses could see some very interesting reversals. And I already discussed about this last week.
And what would be your preferred yen cross?
Aussie yen.
Aussie yen.
Yeah.
There you go.
Exactly.
All right, Wizard. Great to see your charts. I think we have some time left for Blake. Do you want it?
Oh, hey, good morning.
Hey, I know you. Yeah, we didn't forget you, but I know you're probably doing multitasking.
You know what? I was actually was, but you know, we haven't heard from Kman yet, so maybe we should hear from Kman.
We did.
Oh, we did. Okay, then that was my bad.
Let's hear from him again. Go ahead. Let's hear from him again.
Real quick, I want to talk a little bit, just because, and it's nice to have Grega and Stelios here. I you know, and
what
obviously
a team you put together, man.
Well, it's nice to have everybody here talking about everything that's moving. I want to reference yesterday, you know, and this is the second time this has happened in the last couple of sessions. And, you know, yesterday we were talking about the US dollar Canadian and how, you know, the weak data yesterday, you know, you got to be really careful with the Canadian, because what happens is we had that weak CPI that came out of Canada, and the Canadian dollar actually reversed and strengthened, you know, and I'm like, man, it's going to do the unthinkable. We're going to hit highs and then we reverse. I shorted dollar CAD yesterday. I got out of it a little early. Well, actually very early. I only ended up taking like 25 pips out of it or something. And it rolled over, and it's, you know, it's very similar to, like, you know, when we have the jobs report on Friday. You can see it right here. The jobs report was stronger. The CAD, you know, strengthened, and then it reversed by the end of the day. It's the Canadian does some very, very loony things, so you got to be a little careful with it. I still think the dollar CAD has a lot higher to go. And by the way, but if you're like in the ForexAnalytix chat room, for example, like this morning, I said, hey, yesterday dollar CAD was a shooting star. That was this morning, an hour and 15 minutes ago. I said, if it's going to turn lower, I think you have to sell here with stops above yesterday's highs. And, you know, like I said, that was about a little over an hour ago, and it started to roll over. The thing about the CAD, it's on its own program right now, but I do think that it's going to be a bullish consolidation. We'll see a little bit of a, maybe a move lower. You look at like the euro's in a descending wedge, which means that it could actually break higher, following the ECB. Sterling's went below 130.30, but popped its head right back up despite the inflation data. So if we see some dollar weakness, you might see that dollar CAD continue to pull back a little bit. But I think all in all, it's still a buying opportunity if you get a dip, towards 137, let's just call it 137.20 or something like that, because this double bottom or false breakdown, it still has further to go. So any dip that you see here technically in the dollar CAD, and I know it doesn't make a lot of sense, when you factor in the data that we got yesterday, but that's all right. Just let it come down to the technical levels, and then you can be a buyer on dips. That's something that I think is important. One of the other things that I was surprised, well, not really surprised, the Aussie dollar slipped through, and Grega said it, he's like, the Aussie's weak. Yeah, it's weak. We actually broke through 67 cents. I got up this morning thinking, I was wondering to myself, are we going to be able to, stay below it? I'm short from yesterday, from last night. I sold it not too far from where we're at. And again, if you're in the ForexAnalytix chat room and you go to the trades room, you can see exactly where I'm in the position because I post it, so my open position's there. But with the euro popping its head above 109, with Bitcoin looking strong this morning, with the sterling recovering, maybe the Aussie pops its head back above 67 cents too. And I think it was Grega just a moment ago saying that the dollar could start to weaken from this level. You have to start looking at some of these pairs and maybe show us a bit of a dollar reversal, whether it's a dollar CAD, whether it's the euro following the ECB, whether it's the sterling that shows us maybe a reversal after the CPI, because we had such weak inflation data, and I think Ryan said it. I'm surprised, or he's surprised that interest rate expectations didn't change, following the UK data. So maybe this is going to be a place where the dollar actually stages a little bit of a pullback. Now, why would that be? Well, as Stelios brought up just a bit ago, the 10-year yield looks pretty weak. If you look at 10-year yields, it perfectly rejected. And if you guys don't know these charts, I actually even tweeted this myself personally yesterday. This is 161% extension of the last leg lower, 127% extension of this consolidation. We hit that reversed. We're below channel support. Now we're below the breakout point. So 10-year yields look weak. So if the 10-year yield is rolling over, you would think dollar yen will finally give up 149. You'll think that the euro might, finally get its head back above 109 and maybe get back towards 110 by the end of the week. That obviously has more to do with the ECB. Maybe the dollar CAD slips back towards 137, as I was just showing you a bit ago, and maybe the Aussie actually recovers a little bit. I mean, this 10-year yield, and it's not just the 10-year. I mean, you can look at the 2-year, you can look at the 30-year. You can see that yields are obviously dropping. But if the dollar takes notice of this, maybe that's the catalyst that drives a little bit of dollar weakness in the near term. I told you guys on the week ahead video, and I still believe it. I am still going to sell the euro at 110. I just thought I was going to be able to do it this week, but thinking about where we're at, thinking about the ECB, ECB is obviously on a path of cutting rates.
Love that chart, Blake. Everyone take a screenshot. You won't find a better looking wedge formation, and Blake draws great lines too.
Thank you. Seeing this, I wouldn't be surprised if the ECB gives us a little bit of maybe the bulls something to chew on a little bit here, and we get a little bit of a recovery. But how far we're going to get if that does happen, I mean, I wanted to sell euro at 110 this week. I kind of feel that I might have to be selling the euro or maybe, buying the dollar or selling the euro at 110, maybe sometime early next week. And maybe we might get to play the euro a little bit to the upside over the course of the next couple of days.
Yeah.
So I don't know. I think it's really tricky. I think the dollar is a little tricky here, but was it Kman that said it earlier? I'm sorry.
Look at that
I was.
divergence, Blake. Look at you have two higher lows
Oh.
in the RSI.
Yeah, major divergence here. Looks like we're going to do this. ECB just needs to give us a little bit of something to chew on. And then you've got gold that we have this bull flag pattern. Gold's not giving it up. I mean, we're about ready to take out new highs. And if you look at where gold's going, I mean, if just technically speaking, I mean, gold looks like we're going to 2,800. That would be the 261% extension of now that 261% extension is of that daily consolidation that you go back for 2 years, right? This is that comes in at 2,800. So, if gold does that, that probably means the dollar's under pressure. That probably means yields are under pressure. Dollar yen's breaking down, euro's probably moving back to 110. It all points to some dollar weakness, in the coming days. How you want to play that, I still think, and if you go back to the week ahead video from this week, I still think that and here I'll just pull up the charts that I use for the week ahead video, just so I use a completely different subset of charts so I can draw every week and not change it. This is what I drew out for you guys last week on Friday. I said, rally up towards 150 is a short in the dollar yen. And then you're getting comments from the BOJ, like the ones you saw last night, about wanting to normalize policy and that all the pieces are in place for them to continue to do so. I mean, yields lower, dollar sells off, gold rallies to new highs, dollar yen is probably going to be trading down towards, below 148, probably closer to 145, 146. So anyway, those are all the puzzle pieces I put together this morning. And if you want to have conversations about what we're all doing here in the markets, one of the best places to be is in the ForexAnalytix chat room. It's only $1 for 10 days for you guys to try out. You can come chat with us, see what charts we're all looking at, have conversations with us. And, you guys are all on Jumbotron for those of you in the chat room right now. We, just talk about markets and things like that. So, I know we have the Arizona local trader, friend of mine, Chris is here. So, Chris Dover. So I want to thank Kman, Ryan, Stelios, and Grega for being here today. And Dale, thank you for guiding us every single session. Really appreciate it.
Thanks,
Thank
Dream
you,
Team,
everybody.
and all you guys. You know what? I bet there are times during the day after F.A.C.E that non-members wish they could ask Blake or Ryan or Kman a question, and what access you have to all these guys. They're in there all the time to help you. So I know, because I think that. I wonder what I check it out, become a member. So anyway, I know that there are many times people in this audience are going, I wonder what Blake is doing here. So don't wonder, no. And with that being said, Chris, welcome back. Always enjoy talking to you. Even
Good
though
morning, sir.
even though I wasn't a Marine, and you still call me sir, call me Dale or Coach, or stop making me feel like more ancient than I am, buddy.
That's out of respect. I got to speak for Chris on behalf of Chris. That's out of respect, buddy. That's it.
All right. Okay. Well, thank you.
Right, Chris, good to see you, sir. Have a great trading day, guys.
So you always have something on your plate and top of mind every time you come in here, and you talk about diverse things. So where are you at? Were you going to talk about yesterday's sell-off in the S&Ps, and if you still think this is, there'll be a buying opportunity? So go ahead.
Let's go for it. How is everybody?
We're all, like the rest of the country and world, probably on pins and needles about the election. Are you?
Uh, I'm really not paying attention as usual.
Okay. Yeah.
So
You're better off.
apologize.
No,
Yeah,
I try to, and that's the answer I give people now because I'm so tired of hearing about it.
yeah. It's pretty muted in my world, but
Okay.
obviously it's globally one of the most important things happening. So every 3 months I come on, and the last time I came on was this day. So I believe it was the 18th of July, which, just for context, was the local peak there in July, and the market sold off roughly 10%, at least S&P sold off 10%. NASDAQ went a little bit harder. And just for sanity check, you asked me here, what I thought of the market, and let's make sure. Not too worried. In a bull market, the trend is in.
Okay.
I just wanted to make sure that we came right back to it and keep myself honest.
Love the
what was going on?
transparency. We're all wrong, Chris.
I know. Well, so let me just make sure that so my perspective, and I want to start out with this, is I'm looking at about a 10,000 S&P, 40,000 NASDAQ area. Like not the exact number, not anything, but for the next 2 years or so, I believe we're going to continue, and it's definitely not going to be straight up. We have all of this to deal with, all the choppiness throughout. Pretty much that's going to be the case. So with that being said, this I don't think is going to be an issue, turns into an issue. If you're looking at the distance, overall, we're 5,800, 5,900. We still got almost, that's not a double, but it's pretty close to a double from here. And so I got to expect a lot of the pain along the way. So it's all ran, 95% of my work is done algorithmically, so systematically.
Did your system take you out? So a systemic approach
exactly
would have taken you out of the trade and not kept you long until the August low, right?
It's exactly what happened. It's exactly what happened. I was so from this period here, so the after April positioning starts building from probably 20% or so all the way up to 100% of positioning up in here. And within a day or two, we were down to 10% positioning. As we proceed, so it's a long only, these are long onlys. As it proceeds lower down into that area, it got volatile. I was at 10% positioning going into the we'll call it the August 5th crash. And so that was Meta. That was, I believe, consumer staples. It was very, very small exposure. Of a 40 ticker universe, there were like 2 to 3 positions that were on. We hit the bottom there, and that was I did 5% discretion. I basically bought puts on Friday, covered on Monday, only based on my positioning. It wasn't so much based on my witchcraft of the market, my ability to do what Blake and Stelios and all you folks do so much better on the discretionary side. I looked at my positioning and it said, hey, we're only 10% of our total position, and this is an outlier place. So I bought a put on Friday, or bought puts, 1% of my portfolio, covered on Monday for a 15x return, which once in a year, once every couple of years, I get that sort of thing. But again, it was just the positioning that put me there. So I want to start with the positioning right now is at about 50%, just slightly under 50%, as we're moving into new highs. That means that this whole period has been kind of light positioning. I also like to say I like to organize the market by market regimes, top down. You know,
Can I just backtrack a little bit? So you're talking 10,000 S&Ps, right? What gives you the conviction that that's going to happen?
This is kind of a easy answer. Going back to World War II, pretty much.
So it's a technical measured move.
Right? No, I mean, it's not going to stop at 10,000. So I could say 50,000 S&P. I believe that until the global financial system changes and is completely rewired and redone, as long as we're in this sort of area, you know, the global financial crisis doesn't do what it was going to do back in 2008. This would continue perpetually. That's the way I see it. As long as we have the strongest military and the global reserve currency, it should just continue to do that. But I would say that the likelihood of a 2000 to 2013 range, which is this area right here, where one of the longest sideways period going, we look back in the 1970s, of course, I would say that, we get to the 10,000 level, give or take 1,000, maybe, I don't know. And then we do go into maybe a 10+ year, maybe 5 years. It could be an even shorter period, but I would say a longer, wider period of consolidation on the prices, which means, there were 2 recessions through this period. Very tough for a lot of us. Also 70s, same sort of thing. Like if you go back and look at the 70s, from coming out of World War II, it did spend a good 10+ years banging around sideways, going through recessions and fixing itself. And I believe a similar sort of situation is inevitable, but it's a lot further away than we are. Exactly. Yeah. I think we're more at the beginning of it than we are at the end of it right now.
Wow. Okay. All right. So tell us what you're thinking here after yesterday. You're looking to add to your exposure?
So yeah, no, the systems will continue to pull me in. That's a good question, because yesterday was actually quite normal of a day. In this bull, so down here I measure the volatility and direction of the S&P of any market. And in this like green area, we have what I consider the bull quiet. The biggest feature of that is that it is pretty much small up moves, and a lot of the moves happen overnight. So a gap overnight, dips get bought, and you can see that through a lot of these tails. A lot of the action happens, gaps up, goes all the way down, and comes back up. So the day feels kind of like, what did we do? But if you look at it over, the course of a month, you're like, oh, okay, that was productive. And if we look at the last 3 weeks, September 19th is when we had, it was CPI or something. It might have been I don't pay attention so much to that, but it might have been rates. We got that big move up, 1.5% after a big thrust up for about 2 weeks. And it has been 3 weeks of just straight sideways consolidation. And this is very common price action in the bull quiet market regime. Everybody gets nervous because the down days are big. The up days are not as big. You see, I guess Monday was a 1% up day. Tuesday was a 1% down day. Similar action in here. Just the average daily range in these environment is what I try to look at. The last 2 days, the average daily range for the previous month was 100% on these 2 days. So I know I'm probably throwing a lot of.
So that's a normal range.
That's a normal range, exactly. That's what should happen.
We were having tighter ranges, which was not normal before we kind of broke out of that sideways action.
Yeah. So yeah, a good way to look at that is this quiet range here for almost 3 weeks is it's I call it like day traders are in control of the market, where volume is kind of light, ranges are tight. You have tails, you have wicks, so you buy the dip, sell the rip, and you're within this range, and it just bangs around. So day traders do really well because when you think about who moves a market, a day trader, I don't know about you, Dale, but me and my 5 or 10 lots of ES aren't that important to the S&P 500. The person who comes in and says, I need 100 million, that's going to move the market,
Yeah, you're just cannon fodder.
I'm just playing what I can.
Terms.
Exactly.
You're like the Russians attacking the Ukrainians.
Just line them up.
Get mowed down.
Whatever age we can get.
We all try and steal from the market before it steals from us, Chris.
That's right.
so I didn't know until today that you were that uber bullish the market. So it probably doesn't matter what. Just like I showed charts. Market bottomed in 26. Had a pretty good low after the election in 2016 when it was limit down.
Yeah.
What do you think of? To me, it feels like the market's going up, or even if we get a shallow pullback here, that the highs aren't in. I'm not as I'm in the 6,100 camp, and I think there'll be a pretty good, maybe like what we saw from July to August, something like that. But that wouldn't kill the bull market either from these levels. I'm too far away from the mic. So what do you do here, Chris? Just sit back and be patient and wait. Are you going to get? It doesn't look like the colors change much. Is there ever a red color at the bottom of your chart? Oh, blue. Okay.
Yeah, so there certainly is. We had red in October 2023. So we from the summer to October was it was a 4,900 down to what, 42, 4,300.
Yeah.
But those have, so I actually have statistics on this one that I brought with me. Bull volatile, I should have color coded this, but this is the blue, this is the green, this is the like yellow, this is light red, and this is dark red. So since 1927, the majority has been in this neutral, bull quiet, and bull volatile. It's and you look at the chart and you're like, yeah, it goes up. And there's only been 246 days out of something like 24,000 trading days that we've had a major bear volatile, and that would be I don't even think the COVID one registered as that. Let's see if we can get to it real quick. Yeah, it didn't fully register as a like a bear volatile. So they are so few and far between that we can go back and find one here in 2018, what that Christmas Day.
They're as rare as a winning call or put trade. Right? 10%.
Yes.
That's pretty rare. Why do I look for them even? Wasting my time. So a lot of people are wasting their time looking for a swoosh in the market.
I think so. It's the trend is going to do it, and so it's easy to say that. It's somewhat flippant even to say, hey, we're just going to go up. So do you
ever get short? Oh, it's a long only fund, but yeah.
Yeah, for sure. I went short the Friday before the big dip. Again, I was almost completely out of all positions. I have a strategy that takes advantage of the overnight gap. And so I was waiting to see if it was going to go long on the close on that Friday. It did not go long. So that was like the green light to say, buy your put, go ahead and take 1% of your capital and buy puts. And, it caught it. I'm going to grab this other, I don't have it right in front of me. So I need to, here it is. I have another tool that I'm happy to share with everybody here on how I do figure out where these buying opportunities really are, and to expect the chaos that's going to be happening. And so This is a regular S&P 500 weekly chart,
Yeah.
SPX. And down below, it is a 10-week moving average of the New York Stock Exchange advancing issues. The symbol is ADV on TradingView. And so I just took off this is what it looks like when it's the advancing issues. It's not very useful in my, somebody could use it, I'm sure. But I put the 10-week simple moving average on it. That's all we're seeing here on that. And so this gives me an idea of positioning again in the advancing issues, right? Are they buying? Are they selling? Are they, and historically, this has been the best place to buy this shaded area. Even if you bought the, kind of the beginning part of getting into it, within a short period of time, you can see, even if you bought it February 2020, within 6 months or so, you're back to profitability. So it's not a perfect timing vehicle. It's not meant to be a timing vehicle. But what it is when you get into that area, that means that positioning is overdone to the downside. And so you start looking for the upside. Now, the October 2022 low and the COVID low and the Christmas 2018 lows are the only ones that actually breached below that range. And same, for over a decade, it hadn't really happened. So it was kind of unique, this period from the last 6 years or so. But as we came into this one over here, this is the recent bottom we had. This August bottom is right here. And
Nice.
So that
Chris,
gave
you teach all this
that's
stuff.
this.
And
Yeah.
you teach all this stuff. You mentor people, don't you?
That's right. At Pollinate Trading, we go over this stuff. We run it live every trading day. We got our, we have some systems, day trading systems, swing trading systems to participate in all of this.
Is it one of the most rewarding things that you've ever done, teaching someone how to trade and then eventually seeing them get it and then eventually seeing them outperform you?
I love the moment where we get people, so much. I love the moment where we get people away from thinking that they are
Perennial losers.
I think it's better of saying, like, you get them away from the fact that they're not George Soros or Stanley Druckenmiller, and they're managing their own life here and getting that perspective. I think that's like my favorite part, is when it clicks to people that they could be that if they would want to be, of course, but more importantly,
you know what they say, Chris, a good coach can change the game. A great coach can change a life. What kind
that's
of coach
aspirational.
I
aspire to be the latter.
All right, then keep at it, man.
Yes,
and does it make your work better when you're being accountable? When you're laying it out there, to people that you're going to bring your best stuff to the table.
It's so great having such a diverse group of people who have so many opinions and perspectives, and getting able to learn from them, and form our opinions together, I guess.
Yeah, you're a community. All right. And I talk about the importance of community, not only in trading, but for everything, for your life. So that'd be a good segue for you to show people how they could get a hold of you, follow you. I know I see a bromance brewing between you and Saloon. So, I just want to make sure he has your phone number.
Yeah.
So, well, you know what I mean.
Yeah.
Right.
Pollinatetrade.com. Come on over. You can
show it. Yeah, go ahead, show it.
Yeah, you can
sign up right here for you, man.
Let's do it. Yeah, right here.
All right.
It's free to get get on the email list. I do a couple emails a week. There's I'm writing blogs on that. Of course, I'm doing YouTube as well, kicking up YouTube now. So go check me out on YouTube. All of that is all free. If that is at all interesting, there's other things that you can, support my work through purchasing, but none of that is what we're talking about here. I'm just trying to, give everybody what we can. We had a question top of mind, Chris, a trade for today. Mean reversion to the upside is my call for today. I would be looking for S&P to do what it normally does, which would be move back into upper range. If it
range.
Yeah. If it breaks
it
below.
Out? Yeah. Go ahead.
I don't know if there's a catalyst to make it happen today. I think it's a very news light, even though earnings are starting to happen. I think it's a news light week or two. So we might not get much action.
It'll happen over the weekend when Israel retaliates.
This is the thing that I say every day. It's up to Israel and Iran to move the market for us, because we don't have a whole lot of news happening right now, and that's an unfortunate way to look at it, but that's where we are.
Come on, guys. Let's start World War III so we could have some larger average trading ranges to trade.
Jeez, what an awesome way to look at it, right?
Yeah, well, we're like Bobby in that series Billions, who made his first score shorting airlines as he was watching planes go into buildings.
I will throw one last little piece here too. The positioning we had mostly from last November or so into the July peak. Mostly big tech, mostly highly profitable, huge profits, billions, and 20% profit margins nonstop. Right now, the only things that we are in that sector, we're 50% or so exposed long, and it is energy, it's staples, Costco's in there. We do have, so the only thing we have is the semi-sector, not an individual name, because the volatility of that being, NVIDIA. So we're only in this semi-sector ETF, SMH. But the only things that we are in that is big tech on an individual name is Meta and Apple. Everything else is not in our world right now, which might explain why we haven't really been doing a whole lot of big pushing. It's rotated into energy. It's rotated into staples, consumer staples, which is odd.
Yeah, which is defensive.
Exactly, which is odd at highs, and it's at 50% win rate. So if it's wrong, it'll get out and it'll get into big tech or whatever thing. But it is an interesting positioning is an interesting thing to look at as we are going into the maturity of this bull market.
Look at the July high there in S&Ps, and now pull up NASDAQ 100, and we'll wrap with that.
Oh, I know exactly, because I made a bet with somebody on the internet that
So look at that. So the S&Ps took out that July high by a ton, and here we are. We're not even there yet. So definitely leadership has shifted. How long that? Anyway, that's all you can say. What you can extrapolate.
You're 100% right there. 100%.
So Chris, great talking to you, my trading warrior brother. Really, always good. You're an uber bull. I
always look forward to this.
I thought that Dave H. Contrarian was the uber bull. He's only looking for 7,000, and you're talking 10. You win now, man. Okay, you're the most bullish.
Well, it's just a random area.
All right, well, you're randomly the most bullish guy
that's
on the street, man. So thanks for being with us again, buddy. It was really great.
You bet. Glad to take that title. Yeah,
all right, Dale. All right, and people are thanking you. So good hunting. I'll talk to you in January.
I look forward to it. Have a wonderful
kind of
Q4.
Yeah. Good hunting, buddy.
Yes, sir. Have a wonderful
week. Stover, everyone, and follow him at Chris D. Macro on X. Go to his website, check it out. You could tell what a hard worker he is. You know, he's coming up with proprietary stuff. You know, the best people are the people that live and breathe it and are not. They're, you know, it's not work. They love what they do and what they discover, and then applying it. So you can't be lazy and successful in trading. Just want to let you know that, unless you hand your money over to someone who knows how to do it. So that's a wrap, everyone. Have a great day. Chris was great. We had the whole team here today. Consider upping your game and hanging out with the team. We bring guys like Chris in because you know what? If Chris is your cup of tea, you know, we don't consider it competition. We just want you to find the best place for you. And you're not going to find many companies that do that. Speaks for itself. So don't just count your pips, count your blessings. See everyone for the ECB tomorrow. Good hunting. I like Blake's Falling Wedge. You know, I'm still long Euro looking for the pop. See you guys tomorrow. Adios.